My people, my people, my people. This is Jay Real from Free Minds coming to y'all with a crypto market mashup. I'm not your financial advisor, so please don't take anything I say as financial advice. This is strictly my own thoughts and analysis on the market. If you want to learn more about crypto, DeFi, and the metaverse from some of the best in the business, then check out the link below. Alright, so to the topic. The question on everybody's lips is, are we in a bull or in a bear market, right? So first off, to be in a bull market, you have to be in an uptrend, right? You have to create higher highs, higher lows. Bear market is the opposite. You're creating lower highs and lower lows, right? So if we on a bull or bear market, depends on what time frame you look at. If we are right now in the weekly time frame, and when we're looking at that, we are creating low, high, higher low, higher high. And now we're looking for the market to create that last higher high before what we think is the parabolic rise up. So the most important thing to watch here is that the market, that the higher low really is a higher low, that the weekly time frame, that the weekly candle doesn't close below the last low. So we cannot close below the last low, which is at the zone right here. So in other words, we don't want to see the candle, the weekly candle, close below this zone here, this area. Or we don't want to see no weekly candle close below that. We don't want to see the low be below that area. The pivot needs to be above that last low on the weekly time frame, right? Okay, so we have now established that on a weekly time frame, on the bigger time frame, on a macro perspective, we are still in a bullish uptrend, right? Even though we broke that support a trend line, the yellow trend line that you see, we broke it, we broke through it. So, but we still haven't printed a lower low, and that's the most important, significant thing. If we break this down to lower time frames and go down to the daily time frame. So when the market dropped down from up here to down there, we found resistance at a key support level. What is a key support level? Well, first off, this is the key support level. This red box that I have boxed in, it's a zone, it's a key support zone. So what makes this a key support or resistance zone is that it was a breakout point. It had its top, had its low, and then it broke through to new all-time highs. It just broke through, swift and clean. And that makes it a breakout point, which is very important when you look at the retrace, when you look at the market retrace, because you want to know where the market is going to retrace to, and often it's going to retrace right back to a breakout zone. Then it broke back through it down again, as you can see here, touched it multiple times for test of resistance before it broke through it again, and then came back down to test it as support again, actually, before we had this last major move upwards that we have had during the fall, after the summer, late summer, fall. And then the market came down and tested the support line with a wick down, tested it, it held, moved, the market moved down, tested it numerous times. It tested the trend line, the yellow trend line that you see, very important. And I thought it was gonna hold, actually, because it was such a key level and it was testing it so much and it held. So what we're looking at now is, what's the bottom for this drop? One key point is 38,500, around there. That's an important level because it's the last significant low. And it's testing that area right now, as we can see. If we look at the Fibonacci, then we see also that the market has gone down, and exactly at that last significant low, we have the demand zone, which is between 78.6 and the 86.6 Fibonacci retracement level. That's a demand zone. Market's been down, picking up some demand. And this is a major, big demand zone. Market's been there, picking up some demand, picking up supply, and will probably be there for a while, test and consolidate before it decides to move up. Because that's what I believe, that's what I think, that we are moving up from here. Why is that? Well, let me explain that. All right, so this is the Crypto Quant. I strongly recommend to add this page to your bookmarks, favorite pages. It's a very good quant analytic page to see, for example, liquidity flows in and out from exchanges. And as we can see here on this chart, the liquidity supply on the exchanges has dropped. It has become lower and lower and lower. We're on a downtrend of liquidity supplies on the exchanges. What does that mean? That means people are holding their crypto. They are not selling the crypto. If they sell their crypto, they push in liquidity into the exchanges to sell off. But they don't do it. This is not happening. All right, guys, and last thing I want to show y'all is the falling wedge that's been forming. Actually, just discovered it, and it's actually really good. This is really good because it's a very bullish sign. A falling wedge, it's very bullish. We have this downtrend, as you guys can see, with those lower highs. That's the downtrend we've been in since mid of November. The bottom of that trend doesn't follow a parallel line. It's a bit less steep, so to say, as you can see here. And that forms a wedge. And we almost have touched the bottom of the wedge. This is a falling wedge, to show you guys a simple picture. So here we can see the wedge forming. Came up, touch down, touch up, touch down, up, down again. Up means resistance, down means support. And the trend line from the wedge. Last time we had a wedge like this was the last drawback that we had in March, I think it was April. And you can see it here. You can see how it formed here. It looked like this. And what happened after? Came down, touched the support, touched the resistance, support, resistance multiple times, and then it broke out. It just shoot out. And that's the move that me personally, what I'm waiting for. That's the move I'm waiting for. I'm waiting for the market now to go down and test the bottom of the support line in this wedge, pick up some more supply in the supply zone, in demand zone where that I showed you with the Fibonacci tool, and then just shoot up from there, shoot up and go on that parabolic rise to the moon that we have seen those last crypto cycles, and that everybody has been waiting for. Remember this: when everybody is bullish, that's when the market drops. When everybody's scared, when everybody's afraid, that's when the market moves up. Right now, everybody's panicking. Everybody's panicking. And that makes me very bullish on the market, right? So that's it for me for this time. If you feel that you got some value out of this, then please smash the like button and subscribe to my channel. and leave a comment below. Also, make sure you follow us on a brand new Twitter account, Blockboys Crypto. See the link below for daily market analysis, news, and tips on the crypto market. So I want to thank you all and be blessed.